Hello everyone, it's Wednesday, March 4, and today we will review the charts for the euro and the British pound to identify potential market trends. The European currency has extended its weakness, losing more than 153 pips. Although some of these losses have been recouped, pressure on the euro persists. Likewise, following the release of the UK annual budget, the British pound dipped sharply, shedding over 150 pips. Despite a rebound afterwards, sterling continues to face downward pressure. Yesterday, traders received the latest data on consumer prices from the euro area. Eurozone inflation rose to 1.9% in February, up from 1.7% in January, marking the first sign of a trend reversal since September 2025. The ongoing situation in the Middle East could potentially trigger a more significant spike in inflation. Core inflation also increased, rising to 2.4% year-over-year compared to 2.2% in January. This suggests that the European Central Bank needs to stay vigilant and assess the outlook. The energy crisis caused by Iran's blockade of the Strait of Hormuz remains a new concern. Even US President Donald Trump's statement that the United States would patrol the strait to ensure tanker access failed to calm market fears. Despite a slight pullback, oil prices climbed high again, raising the risk of a serious global energy crisis. Thus, the market is closely watching this situation, awaiting new developments. In addition, Fed official Neil Kashkari delivered a speech yesterday, ruling out any rate cuts in the current environment amid concerns about a potential new spike in inflation. The two reductions originally scheduled for the middle and end of this year are likely to be postponed. Much will depend on how this situation unfolds. Kashkari expressed his worries about rising inflation, confirming concerns that have been widely discussed earlier this week. Now let's take a look at today's macroeconomic calendar, which includes a series of data on services activity from Spain, Italy, France, and Germany. The German services PMI is expected to remain above the 50-point threshold, supporting the country's economic growth. Additionally, the euro area and the UK are set to release data on services sector activity, with PMIs projected to be relatively positive. If the readings exceed analysts' forecasts, the euro and the British pound could enter a bullish correction in early trading. Traders will also be attentive to producer price and unemployment data from the euro area. The PPI is estimated to have risen by 0.2% in January, following a decline of 0.3% in December. The Eurozone unemployment rate is projected to hold steady at 6.2%. In the United States, the calendar includes the ADP National Employment Report, with private job growth expected to more than double to 50,000. The US will also release data on services activity from the ISM and S&P. The reports are anticipated to be largely positive, potentially increasing demand for the US dollar and placing the euro and the British pound under renewed pressure. There are no scheduled statements from Fed officials today, so the primary focus will remain on Trump's remarks and developments in the Middle East. Turning to today's 1-hour EUR USD chart shows that long entries could be taken on false breakouts at 1571 or 1534. Going long on a rebound would be relevant around 1493, counting on a 35-40 pip move. Overall, short positions look more attractive right now. Selling opportunities would emerge at 1610 and 1641 on a false breakout, or at 1.1672 on a rebound, targeting an intraday correction of 25-30 pips. A breaking held below 1571 would increase downside pressure and open the way to 1534 and 1493. Speaking of the British pound, the trading setup is similar to that for the euro. In case of a bullish correction following upbeat data on UK services activity, bears are likely to step in around 33.38. A false breakout at this level would trigger a sell signal, potentially pushing sterling down to 32.96. If the price breaks through and holds below this mark, another selling entry point could emerge, with the British currency sliding to 1.3255 and potentially reaching 32.15. At this level, I would recommend looking for a long position on rebound, targeting an intraday correction of 25-30 pips. If selling activity is muted at 33.38, short positions could be considered at 33.83 on a false breakout or at 34.20 on a rebound, aiming for a move of 35-40 pips. Going long would be advisable at 32.96 on a false breakout or at 32.55. However, given the bear market conditions and the broader global environment, it is prudent to focus on short entries during corrections and risky assets, while betting on a continued rise in the US dollar. Best of luck to everyone.